Hi there, my name is Nikola Delic and I want to thank you for visiting my website. Today I have a really great trading system just for you. It's called the Big Trade Profit Catcher. This is a system I only shared with my inner circle trading group that everyone had a really great success with. I want you to give this system a try and let me know what you think about it. If you have any question or you just like the system, leave me a comment down below. In the next few days, I'm going to award 3 students for a full scholarship to my new ND10X Masterclass Training Program. Okay, let's get started. Hi traders, welcome to Big Profit Trade Catcher System. In this video, I want to introduce you to one of the most simple and yet really powerful trading systems. It's called the Big Profit Trade Catcher System. You can trade this system on any currency, commodity, or crypto asset on 15 minutes and 1 hour time frames. The indicators and tools we use to trade this system can be found on the designated download page below this video. For this system, we need to use COG, MACD, and the moving average. COG indicator. The center of gravity indicator is a graphical tool that helps identify support and resistance levels. Our version is slightly combination of original formula and Bollinger Bands. We are going to use it as a leading indicator to try to figure out highs and lows in the market. The best way to figure that part out and how central of gravity works would be to look at this chart. This is the Aussie dollar 15 minutes time frame, and we have a red ribbon, we have a green ribbon, and the midline. So every time we test that red ribbon, we should see a nice resistance. And every time we test a green ribbon, we should see a nice support. And it's always going to work great. Also, you have that midline just to more or less confirm if that is going to work. Idea is simple, like if we test the green ribbon, we need to see a price above the midline, and the same goes on the other side. So similar like you would use the Deutschen channel, but here the formula is much different. In my opinion, it's a little bit leading. Next indicator is the MACD. MACD, the moving average convergence divergence oscillator, is one of the best momentum indicator ever built. The MACD turns 2 trend following indicators, moving averages, into a momentum oscillator by subtracting the longer moving average from the shorter moving average. This indicator can be used to identify trends and momentum. But for us, we are going to focus right now on the crossover and divergences only. Here is the chart of the pound yen on the 15 minutes with the MACD. So first of all, what you can see is the histogram, and you have the two moving averages. So if you want to look for a divergence, you can use that histogram and say that this is what? A low, a higher low, while here you have the low, lower, low, lower, low. So a divergence, or if you want, my suggestion would be to use these 2 moving averages as your place where you are going to search for the divergence. Like here, we have the low, lower low, while here we have the high low and the higher low. So technically speaking, a divergence. I'm not going to go much about divergences since we already talked about this. But the second thing you can use, or you should be looking would be to wait for the crossover of that MACD two lines to happen, because that can tell you that there can be a short-term change in a trend. Like you see, it's not going to be that leading indicator, but still it's good as a confirming indicator. So it's a little bit of a lagging, but still, since we have that central of gravity that's leading, this one can be a good for confirmation. Here's how our full system looks like. So first thing first, we have the central of gravity, we have the EMA, the 7 EMA, and we have the MACD. So technically speaking, that's the only thing that you really need to have on your chart. For the time frames, you are going to use 15 minutes and 1 hour. Depend. If you want to swing trade, go with the 1 hour. If you want to day trade, go with the 15 minutes. Now, let's get to trading rules. First of all, like always, we are going to talk about the buy rules. Step 1. The market must be inside the downward trend, and we should see price testing lower central of gravity channel line. So like you see here, price is moving lower, and price over here tested at a lower, we can call it a ribbon if you want, so a green ribbon. So that is the step 1 and the things that we want to see first. After that, we must see the 7 EMA, that red line, crossing above the mid central of gravity line. And after that, we wait for the MACD to see blue line crossing above the orange line. So first thing first would be that we want to see that a red line crossing above that mid central of gravity line. That would be, in our case, our blue line. And after that, you want the blue line to cross above the orange MACD line. Step 3. Enter a trade when you see MACD crossover happening. You can wait for the candle to close as the more conservative approach, but still, if you see a crossover happening, feel free to enter a trade right away. For stop loss, use the previous low. In most cases, that low is going to be what? That low is going to be the place where you have your step 1 happening. So the time where we test that green ribbon, that's going to be the low point. And for the take profit, use 1.5 times of the distance from the entry to the stop loss. So we would enter right here with using this as our stop loss, and 1.5 times that distance would be our take profit. Here is another example. We are waiting for what? We are waiting for the price to give us some bearish momentum that's here, and we tested that central of gravity green ribbon right here. So from that point, we are looking for what? We are looking for this red EMA to break above that mid COG line. So that happened here. And from there, you are aiming for and waiting for this blue line to cross above that orange line that happened here. So after this candle close, so over here, this would be our entry point. We would use the low. This is our low as our stop loss, and 1.5 times that distance would be our take profit. So simple enough. Here is another example. So Over here, we are aiming to find the same thing. So over here, we got our test after a nice drop down. We got our test of the lower center of gravity channel line. And from there, we can see what? We can see that a red EMA is already above that blue. So we have that part fine. So we just wait for the blue line to cross the orange line, and that happened here. That happened here. So at the opening of this candle, we enter a trade while using the low. So this is our stop loss, and 1.5 times the distance from the entry to the stop loss would be our take profit. So something like this. Just simple. Now, let's cover the sell rules. It's the same thing, just the inverse process. So step 1, the market must be inside the upward trend, and we should see the price testing upper central of gravity channel line. You can call it again the red ribbon if you want, if that's easier. So we have a nice spike higher here and a test of the upper ribbon. So definitely we want that. After that, we must see the 7 EMA, that red line, in this case crossing below the middle central of gravity line. And after that, we wait for the MACD to see orange line crossing above blue line, so just the opposite. So over here, what we can see is that red line cross below that mid central of gravity line, and here we can see that orange line now crossing above the blue line. So that's what we want to see. Again, enter a trade once you see MACD crossover happening. Again, you can wait for the candle to close as the more conservative approach. For stop loss, in this case, use the previous highs. And for take profit, again, use the 1.5 times of the entry to stop loss distance. After we get here crossover and here crossover, we can enter a short trade by using the previous heights as our stop loss, and 1.5 times that distance would be our take profit. Let's check more examples. So what we can see here is that we tested our upper channel line. From there, what we see is the crossover, that red line crossing below the mid COG line. And from there, we want to wait for what? We want to wait for this orange now to break above the blue, so that happen here. So we can look for the short there while using the previous high. So this is our stop loss, and a 1.5 times this distance would be what? Would be our take profit. Then price continued to move higher. We retest that zone, and again we can wait. We can see here what? After here, we can see that red line is already below that central of gravity line. So we have our confirmation one, and all we need is that orange line to test and break above the blue line. So from here, you can re-enter a trade. In this case, you can use this high as your stop loss, and 1.5 times that distance as your take profit. Here is another example. So we are moving higher, and the test's happening here. After that, red line crossing below the blue here. From there, we are waiting for what? We are waiting for this to happen. So entering there while using the high as your stop loss, and you are using 1.5 times that size to do what? To place your take profit. After that, price move higher, retest again, but a red line never crossed below. So nothing from here. Then price make a new push higher, and we drop. Like here, we see that drop. From there, we are waiting for what? For the orange level. So to cross above the blue one, and that happened here. So if that happened here, this is your entry point, the high is your stop loss, and 1.5 times that size would be your take profit. Definitely, I think this system is really easy to follow. All you need to do is just wait for price to test the one side of the ribbon. After that, wait for that red EMA to cross above or below that mid-channel line. And from there, you just need to wait the MACD as you're a little bit late confirmation, but still a good confirmation for this example. Profit rate catcher system scanning process made simple. With the idea that we must see a test of upper-lower central of gravity line, the easiest approach to find the potential trade is to focus on instruments that show a decent momentum right now. For day trading, try to search for the instruments from our moving right now and high of a day, low of a day scan list. For swing trading, try to search for the instruments that show the strong momentum in the last 24 hours, because only those three lists have a good chance that they are either already testing that ribbon or they are close to that upper or lower parts of our central of gravity indicators. So if you don't want to wait too much for the entry point, these scans are really necessary for you to have and watch. This system is perfect for new traders that want easy to follow system with a decent success rate. Ideal risk per trade is 1%. And I can only say that only trade one instrument from the same group. Like a dollar group, one instrument from the yen group, one cross, one exotic at the same time. That's all for now. Good luck and have a great day.